Hi, good morning, Philip.
Hi, Yaacov. How you doing?
Welcome everyone to this launch edition of the podcast. I am here with Philip Stein of Philip Stein and Associates, founder. The idea of this podcast is to kind of give people a little bit more insight, some tax knowledge, but mainly it is PSA, people, stories, and accounting. So Philip is a prolific storyteller, has a large amount of experience in the field, been here for a number of years, having grown and founded the firm. And we wanted to just chat about some tax topics that are changing and everything else. This week in particular, we had some big news. The One Big Beautiful Bill passed. And so we wanted to kind of dive into that a little bit, share with everyone some changes and what it means for US citizens living in Israel, and how that can change the game for them in terms of some savings that they can have.
Okay, this is it is a big bill. I don't know if it's beautiful, but it was big. It's also interesting to me historically. I remember looking at this in Trump's first term that he passed that at the very end sort of his, I think, first year in office. That's usually when tax bills get passed. It's sort of when presidents have the most momentum, and in the case of Trump, he does have control, even though it was razor thin in both houses of Congress. But it did pass, and I think we sort of decided today, Yaakov, you and I, we're gonna do this over several weeks about what is in this bill or what isn't in this bill. But as you said to me before, a lot of it is the things that aren't changing. Right? There's a lot of things that are staying the same, and I would even preface by calling this session "Age Before Beauty." We're going to talk about things that are going to benefit people in my category and up. Okay.
Yeah, yeah,
Uh,
for sure.
so there was talk. Let's start with the first one. There was talk, which was sort of irrelevant for people living in Israel, but we always sort of present it as one of the benefits of Aliyah, that when you make Aliyah, you don't have to pay tax on your Social Security, whereas when you were still living in the States, you did if you were above a certain income limit. So that was sort of, if Trump had talked about removing tax on Social Security, in the end, that part of the bill didn't pass. But for people living in Israel, it's sort of they're getting a bonus here. And can you talk about what happened?
Sure, sure, yeah. It is, I think what people when in 2017, I remember when we were going over the bill that passed at that time, and it was a very vastly different time for us. And I remember having that bill passed, it changed everything at the end of 2017. I mean, we had to learn so much in terms of new tax rules. The standard deduction changed. Exclusions were a thing back then for each person that you had in your family. All of that went out by the wayside. Itemized deductions became much less powerful. The whole tax return, if you remember, Trump put it on a postcard. That was like the big push. That is the one thing I am so thankful for, that this bill did not try to do anything and mess with the actual tax return itself. That was crazy, and it didn't make any sense. No one was taking a postcard with their social security number and mailing it in like that. It just totally destroyed how the 1040 looked, the tax return looked, and that had to be adjusted. What is really nice here is the fact that these are just making a lot of what's passed in this bill just makes what was already the law from 2017 in the Tax Jobs and Cuts and Jobs Act into something more permanent.
Actually, when you look at it, it's quite remarkable because one, had Biden, or well, not Biden, Harris been elected, they would have
No, for sure.
expired. We'd be having a totally different discussion now. If one of the houses in Congress had gone Democratic, we would not be having this house. So he was able to become president, get both houses, and even with razor thin margins, he was able to pull this off and do it on July 4th. It's truly
Yeah.
remarkable.
It's crazy. And I think if he hadn't passed this, then we would be analyzing this in the total opposite direction.
Correct.
Okay, standard deduction changes, estate tax goes down, everything reduces, and everything taxes could go up significantly for people living in Israel. So this is a nice, and in the future we we might see that happen. But for now, I think it's actually kind of interesting how much is now going to stay the same. So the deductions stay the same. They go up marginally, but that's not going to change. Everything, tax rates are going to stay the same. So we're not going to see that 39.6 tax rate again so quickly. We have the 37% highest tax bracket, which is nice in some ways. But yeah, specifically to your point that you'd mentioned about Social Security and his promise to kind of say that Social Security isn't taxable anymore, he did get rid of that. But what they did keep in is this extra deduction for people who are 65 years or older. It's even starting now in 2025, which is nice. A lot of these changes only happen 2026 and onwards. This is one that already takes place for 2025. If someone is 65 or older, $6,000 extra deduction. Married filing jointly with two people that are older, 12,000. So
That's
nice.
quite significant
Yeah. And
for our clientele or those clients of ours who are based in Israel. It's really a real gift. Okay.
yeah, especially because I think most people don't even realize that Social Security, when you're living in Israel, it's actually tax exempt under the treaty. So this is
Now,
a
is
nice.
that considered an addition? It used to be, as you referred to in the old days, when we'd have exemptions for individuals, or there used to be like an extra exemption or an addition to the standard deduction, like if you were blind or something like that. But is this an addition to the standard deduction, or is this just a standalone deduction?
It's unclear. I'm not positive. It looks like it's a separate deduction or it's an increase, but I don't believe that it overrides the additional increases that you would have otherwise.
Okay.
I think it is in addition to all of that. So it really, really boosts it to an higher amount. Now, the one caveat is that there is a cap, meaning there is if you have modified adjusted gross income, if you have the magi, if it's over 150,000 for married filing jointly, 75,000 if you're not married filing jointly, then it does kind of start to phase out this additional amount, which also leads me to believe that it is entirely in addition and separate from the other bonuses that you get.
Right, because usually when it's part of the standard deduction, you and I are just talking this out loud. That affects people, filing requirements, for example. So you might still have a filing requirement, but you may not have to pay tax because
Yeah.
of this.
And especially, again, this is lovely. Like, imagine someone living in Israel. They have their IRAs that they're taking out. They're retired. Social Security benefits. Social Security is wiped out. Now, in addition to that, they have another 12,000 plus the standard deductions. You can be making quite a pretty penny
All
and
right,
not
so
be paying anything.
Nefesh B'Nefesh should be adding this to their
Yeah.
marketing for senior citizens who think they're saving tax by living in Florida, but in fact, if they move to Israel, they could even save more tax.
In fact, it's interesting. I didn't think about this until just now, but I wonder this weird change could also potentially reduce Israeli taxes, right?
Let's hear
Under
your
that,
thinking. Okay.
yeah, because there's that interesting rule that if you are living in Israel and you are post the 10 years, right? So you're post 10 years of Aliyah, you're living in Israel, you are taking out your IRAs from the US, they will do a pension projection. So this
Excellent.
can actually
Yeah.
reduce.
So this is really, it's saving US. It's saving, if you're past the 10 years or never were in the 10-year tax holiday, it could save on your retirement. It will save on your retirement for sure because it will lower your US tax. That's pretty cool. Now, another topic you raised it before when you were referring to Trump's original tax legislation, which back in Tucson sort of just so many people who may in the past have itemized the deductions. We sort of they got rid of exemptions, raised the standard deduction, knocked off real estate tax, things like that. And people who give charity or gave charity, it sort of got lost in the shuffle. But I'd like you to address that they've given something extra here also with regard to charitable deductions, even if you haven't been itemizing for many years.
Yeah, and this is phenomenal. I mean, in Israel, where people give so much to charity, to kind of be able to take the standard deduction and still get something out of it is wonderful. So, if you remember, President Biden actually passed something in the CARES Act in 2020, 2021 that allowed for a one time or two time, like for those 2 years, 2020 and 2021, and allowed for an above the line deduction. And what that means is that usually people will have to choose. They get a standard deduction amount that they can automatically reduce from their income and not pay tax on it, or they have to choose to itemize deduction. And what that means is that there are certain deductions or payments that they make that they can then reduce from their salary, like charity, medical expenses. State tax is a big one that is also addressed in this bill to some degree, right? All of those things, if they combine over that certain amount of over the standard deduction, then you can choose to do that. What this does and what's nice is this adds, you can still choose that standard deduction, but still get an additional deduction for charity that you're giving. It is for $1,000 for married filing separately, or if you're filing alone, $2,000 if you're filing jointly.
That's nice. And again, following your principle, it will potentially save you Israeli tax for, again, we're talking about our retirees. Okay, so this is
Yeah.
just another gift, because we have found, as you mentioned, people tend to give charity, and particularly our clientele and those people in Israel. So I guess the thing is, save your receipts, right?
Yeah, yeah, definitely save. I mean, most people do for Israeli tax purposes
Right.
anyway, and then they try to give them to us for US taxes, and we're like, it's not worth it. It's not more than the standard deduction. So, what's nice here is also one of the things that I love about this is most of the time when there's a benefit for US tax purposes, you already have your foreign tax credits that come first, right? And because of that, you often don't get the benefit that you would from these deductions. What's nice
Mhm.
about this is this deduction comes first. It's above the line. It's before that standard deduction even. So it's when you're getting to what your income is, you take this into account, and then you tap into your Israeli taxes that you're paying to offset your US taxes, which means that you get to keep more of those Israeli taxes as a benefit for longer. You get to use that. So it can really have nice benefits for everyone that is giving. And I would find it hard to find people who aren't giving some amount that they can then use.
Sure, yeah. It's really money in the pocket. When I was getting my MBA a long time ago, the University of Michigan Business School allowed me to take several courses in the University of Michigan Law School. And I would go to the law school. I took a few classes in taxation. I would go in terrified every time because they use the Socratic method, and if the law professor called on you, you didn't want to go through that experience. But I remember there was a small tax reform, 1976, and he would never refer to it as the Tax Reform or Tax Act of 1976. He called it the CPA and Tax Lawyer Employment Act of 1976 because it created so much work. And I think the last thing that we wanted to talk about today was about the estate tax exemption. That had this expired, a lot of our colleagues and people that we love to work with in the legal community who work in trust and estates, they'd be very busy at the end, the last half of this year. I think they can plan some vacations. They can go away this, Hanukkah or Christmas. But talk about what
Well,
happened there.
we'll definitely see some of them planning vacations. I think also they'll have a lot more returning clients than they would have had otherwise. Everyone who already gave the max deductions that they could, all of a sudden will be able to give more. So there is what happened is basically that they will increase it. So we were worried about the sunset that was going to happen at the end of 2025. That sunset isn't going away. In fact, beginning January 2026, it will increase from about 13.6 million per person now to about 15 million per person. So it will, that's 30
So for a
million.
married couple, wow, that's going to really.
And that's a permanent change, the way that the laws are. So it's not going to sunset in another 8, 10 years. That is something that is there to stay until someone makes a new law changing that back down or something. But
And
it's
even people, maybe you want to just say a few words, even people who are married couples, if we're talking about married couples, well, there's two aspects that maybe I would like you just to address: the portability issue, and also when one spouse may not be a US person. Okay.
for sure. So yeah, so I mean, from portability aspects, there is the ability to port over or take over from one spouse who passes away to the next. So let's say you have one spouse who, or both of them combined at the moment are not worth 30 million, but they do have assets that will increase over time. Real estate in Israel, that happens to be the case that it goes up quickly. So if when the first spouse passes away, you can move their amount over to the second spouse through portability, giving 30 million to that surviving spouse, which would then allow them to have larger amounts in the future. It also is set to continue to increase over time. They haven't gotten rid of that or anything. So
Indexed
it will,
inflation. Okay.
yeah, it is indexed. They did change the starting year for that index, but that shouldn't affect anything really. It's going to be a nice amount that will just continue to increase and go up every year afterwards. So also we have lots of clients who gave away the maximum amounts that they could. And now all of a sudden this opens the door to do some additional estate planning. And there's interesting ways now to do that with other changes that have come into play. So for example, just a quick teaser out there, I will say, is that what this law didn't change, what the one big beautiful bill did not change, is it did not get rid of the cap that you can take for state taxes. It did adjust it, so it goes from 10,000 to 40,000. But what is cool is that trusts have a different set. It's not under the same person. So if you do things properly and you do pay a lot of taxes and at the state level, you can actually split it between some trusts and thereby increase the amount of that cap that you're able to get. It is, yeah, like we said, it's starting in 2026. And you mentioned, I mean, Philip, you can mention in terms of U.S. citizen married to a non-U.S. citizen.
Yes, there's if a U.S. citizen, the survivor, if the non-U.S. married to a non-U.S. citizen, they can heir their estate to their U.S. citizen spouse, taking advantage of marital deductions. So they won't have portability; they won't be able to transfer in, but it defers any tax. And then there's when it goes the other way, when U.S. citizens are married to non, there is something called QDOT, qualified domestic trust, and those are also, again, they're more sophisticated. I'm not going to go into great detail here, but just people should know, just because you're not married to a U.S. person doesn't mean upon the death of one before the other that that the heirs have to plan on paying estate tax. I guess what I would like, from my perspective, I think, I don't know how involved they were, but to the seniors listening to this, our first inaugural podcast, you might want to increase your contributions to AARP, because if they were working on this, they saved you money. So, give them support, or anybody else who is out there, because I think we'll talk about younger people too and people who are in between in the coming sessions, but this is only positives for people. You know, who are retired or retiring, and particularly for people moving to Israel. I think there's some extra goodies here.
Yeah. No, it should be phenomenal. It's 2025 and onwards should be a nice year for as they say, good news for the Jews to some degree. Taxes should hopefully be lower in the US, should be beneficial. Young people, they have a lot of positive things coming their way in terms of how it worked out, and we'll definitely get into that. But yeah, makes it really, really nice.
Hope to see you next week, if not
Yeah.
sooner. Okay,
Thank you, Philip. Yeah, for
be
sure.
well.